Ladies and gentlemen, welcome. Thank you for joining me. It is March 16th, 2016. We had a Fed meeting today, and there was a lot of action in the markets, including the gold and silver markets. So let's get right into it. You know, they have these meetings once every 6 weeks. And it's a little bit annoying because if you don't keep an eye on the Fed schedule, you can miss one, and they really impact the markets, especially over the course of the first 48 hours or so after the meeting. It's not that they dictate the markets, but they absolutely impact the short-term course of it. And we could argue they impact the longer-term course of many markets, for example, the value of the dollar. And so today we see that the Fed has left the key interest rate the same, still in the 0.25 to 0.5 range that they set back in December. And again, let's not forget, this is an historic low interest rate still. So we had all that turbulence in the stock market, especially over the last 6 to 8 weeks, as a result of just the very first rise. So I continue to maintain that the Fed is trapped. We are living through an experiment. Let's not forget that. It is not all said and done. The future is not written. We do not know how this particular experiment is going to turn out. The best we can say is that every other attempt to have a central bank in the history of the United States has failed. This one has gone on a lot longer than the other experiments. But we can see right now that they are having a hard time returning monetary policy to something like normal. So how did this impact the markets today? Here was the drop in the dollar. You can see that right around midday. That is a huge drop for the value of a currency in just over 2 hours. This figure right here is not giving us the proper percentage. This is talking after the markets closed in the PM through this time at 10:44 p.m. We're talking about this drop right here after the Fed announcement after 2 p.m. today. So a very significant drop in the dollar. That was almost an impulsive move out of the dollar. The dollar is still range bound on a longer term scale, but that is absolutely a negative that we're seeing here for the value of the dollar when you see that happen in such a short period of time. Let's look at this over the course of the last 3 months now. We haven't looked at this chart for a while. All we're doing is comparing the valuations on a relative performance, starting at the same value here at the Fed meeting from December of 2015. That was a key significant Fed meeting. Why? Because it was the first interest rate rise in over 9 years. So since that time, we've been watching this basket, these 6 major world asset classes here. And yes, I'm leaving out some asset classes. However, we're doing the best we can with this one chart. Gold still leading the way higher since that rate decision. Silver coming in second. U.S. 20-year bonds, long bonds as they are called, coming in third. Commodities and stocks, notice this is green right here, and U.S. stocks in black, have clawed their way back from negative territory since February. And we can see here, look at the correlation between stocks and commodities. So there's definitely a correlation between the industrial component of stocks and the industrial component in the commodities basket, as separate from the monetary component of these precious metals. We're still seeing that divergence. The US dollar basically coming in flat over this time. So we do need to keep an eye on this every so often to have a good sense of the trajectory here. I maintain this was a historic rate rise. That's why I always start this chart at this point, the 16th of December. That was the low in gold, the low in silver, And we have seen this move since then. This move is not happening for no reason. Gold doesn't move like this for no reason. It's warning us of something. What is it yet? We will have to see. Looking at the move in gold today, look at that blast higher right after the Fed announcement. Basically eclipsing the high from a few days ago, coming back a few dollars into the close. Now, on a day like this, where you have these impulsive move higher, what this is a combination of new buying and a lot of short covering. You had a lot of people who were selling and shorting gold here on this day on Monday, and they got trapped and they panicked and they said, get me out. I don't want to be short this market right now. So that accounts for that rocket blast higher that you see. Now, in my experience, when gold makes a move like this, an impulsive move like this, in a few hours, there's typically follow-through buying that will occur the next day. So I'm expecting gold to eclipse this high tomorrow, which would be Thursday. I'm expecting to see the price kind of come up maybe to 1270, 1275. Maybe not that significantly, but I think this is going to be the start of a continuation of the trend higher. Looking at this over the 6-month time frame using the GLD fund, notice the fine technical action that we are seeing right here. This triangular consolidation, which broke early, then came back and hit this line right on the line before powering higher today. So we're still in this up and down, gently trending move higher right now in gold until proven otherwise. The danger right now is that you get caught trying to get a little bit too fancy with the gold market, trying to get a little too short-term oriented, and then the market has something like this, like we saw today. Looking at the gold mining sector side as referenced by the GDX fund, powering higher, almost 7% higher in one day. Basically making a new high, coming right up here to this 21 resistance level, which people who are subscribing to my premium service know that we are talking about this level as an important resistance level, so we're watching that very carefully. Mind you, this move higher, so we had broken out of this short-term uptrend here, broken down just there briefly for a day or two before powering higher. So I had mentioned this. It's one of those principles of looking at these short-term trends, which is when you have a very steep trend higher, the breaks lower are less significant than if you had a longer-term, gently sloping trend. The steep trends, when they break lower, all they represent is a period of consolidation. So we're seeing that here. We'll redraw these lines when we get a better sense of, is the sector ready to move higher, or is it going to continue consolidating, in which case we'll have our next point here. One other thing, the volume coming into the GDX fund was the highest it has ever been in any one day on the GDX. The single highest volume, that single highest volume was tied for one other day a couple of weeks ago. So 2 of the highest volume days coming in the last month. Guys, there are big moves happening in these sectors. Let's move that down and zoom the gold market out. We're watching this uptrend now forming. Anything within this zone looks good to me. I still expect to see the first significant resistance come right around 1300, 1305. This is the high from early 2015. That will represent the first significant challenge for the gold market. We'll reassess when we get there. Looking at silver, also a blast higher today. Notice relatively weaker than gold still. That relative weakness still holding. The trend hasn't broken yet in favor of silver. That's okay. We know that it's coming at some point soon. Let's look at the SLV chart now on 6 months. It's just, I love to see this kind of action. I mean, I'm a technical kind of guy. I'm a fundamentalist at heart, but as far as the workings of my brain, I like to see this technical action. And this couldn't make me happier right now to see this up and down consolidation. This is very similar to the consolidation we saw in gold a couple of weeks ago. It's just happening at a lower level, and it's taking longer to play out. It's an up, down, up, down, up, down, up, kind of coming a little bit lower on the highs and coming higher on the lows. So we have this target here. I'm talking about a move higher for silver any day now. Looking at the silver Wheaton, strongest silver miner of the entire sector as far as I'm concerned, a new high today on silver Wheaton, another early indicator that silver is not going to be languishing for that much longer. Move that back down. There it is again. I think we are going to be breaking out of this consolidation fairly soon. Zooming this out very quickly. And this break right here of this bottoming wedge pattern, there's no way at this point that you can't acknowledge this, right? This is getting more and more obvious the farther that we move away from this line. Now, I can agree if you are saying that, well, we have still lower highs coming into the price of silver. I can agree with that. But this bottoming wedge pattern, if you study these patterns over time, you will know that these represent bottoming patterns. And with the early warning indicators that we have across the gold mining sector, across the silver mining sector, and across the price of gold itself, you have to take those into consideration when you see a break like this. So this break of the downtrend here, yes, although it's still a lower high, we are gearing up for a move higher in silver. It'll be very interesting to watch when it approaches this line, the 1625, and then more importantly, the 1825 or 1850 level will be a very significant challenge. That could come this year. It could, or it may continue to consolidate here below 1625. The executive summary. Please do not try to get too cute with a new bull market. It will throw you off. It's important to recognize the long-term trends that are developing now and to establish a core position. I encourage you to do some inner searching, some inner evaluations. Don't just listen to me. Don't just listen to anyone. But what do you believe? If you believe that this is the start of a significant move higher in the price of gold, that this multi-decade consolidation that we've talked about and that has come back down and retested that breakout level above 1,000, if you believe that that is the retest and that we are now moving higher, you do not want to get thrown off this bull market by trying to trade in and out every week or every couple of weeks. It'll eat up your portfolio. You won't be able to time every single move correctly, and it'll leave you buying in at higher prices. If you believe that, I tell you what I believe, but everyone has to come to their own decisions here. And silver will be moving higher very soon. That is my concrete prediction. Things will get very interesting at 1625 and again at 1685. That will be very interesting. Will determine how long this stage 1 base is forming when we see the action at both of these price levels. Thank you very much for watching. The next update will be on Sunday evening. Have a nice rest of the week, everyone.